XRP jumps 6% to top market gainers as Bitcoin retakes $111,000. Solana, Dogecoin, and Ether also rallied, while CME crypto futures hit $30 billion in open interest, signaling growing institutional demand. Altcoins bounced back sharply on Tuesday after a steep sell-off over the prior 48 hours, with traders seizing lower prices as an opportunity to re-enter the market. XRP led the recovery, gaining 6% over the past 24 hours. Solana SOL $197.78 and Dogecoin Doge $0.2183 each climbed about 4.5%, while Ethereum ETH $4.561.37 added 5% over the same period. Open interest across these tokens also ticked higher, signaling renewed speculative activity. XRP once again stood out, with its open interest rising 4.2% in the past day. The uptick comes as CME Group announced earlier Tuesday that its crypto futures suite surpassed $30 billion in notional open interest for the first time. SOL and XRP futures each crossed the $1 billion mark, with XRP becoming the fastest contract to reach that level, doing so in just over 3 months. Analysts see this milestone as evidence of market maturity and growing institutional participation in crypto derivatives, not to mention the sort of interest a spot XRP ETF might generate. Think people might be underestimating demand for spot XRP ETFs? Wrote ETF expert Nate Geraci. The broader market also strengthened, with the CoinDesk 20 Index, CD20, up 3.6% on Tuesday. Bitcoin BTC $111,094.29 lagged behind, gaining only about 1%, but did cross back over the $111,000 mark after dropping below $109,000 at 1 point hours earlier. Both Bitcoin and Ether hit record highs earlier this month, lifted by expectations of monetary easing and increased institutional demand. Yet sentiment may be running too hot, according to blockchain analytics firm Sentiment. In a report published Sunday, the firm warned that optimism around a potential Federal Reserve rate cut in September has reached levels that often precede corrections. While optimism about a rate cut is fueling the market, social data suggests caution is warranted, Sentiment said, pointing to a spike in online chatter around the Fed decision. The firm cautioned that if expectations of easing fail to materialize, the market could see a swift correction. Traders are now watching Friday's release of the Personal Consumption Expenditures (PCE) price index as a key signal for the Fed's next move. Helene is a New York-based markets reporter at CoinDesk, covering the latest news from Wall Street, the rise of the spot Bitcoin exchange-traded funds, and updates on crypto markets. She is a graduate of New York University's Business and Economic Reporting program and has appeared on CBS News, Yahoo Finance, and NASDAQ Trade Talks. She holds BTC and ETH. AI Boost indicates a generative text tool, typically an AI chatbot, contributed to the article. In each and every case, the article was edited, fact-checked, and published by a human. Read more about CoinDesk's AI policy.